Today, I'm super excited to share something really personal with you. How I took $1 million portfolio to $1.8 million in less than a year. I'll be diving into the details of how I built this portfolio, the assets I chose, and the results I have seen. Whether you're just starting out or you're a seasoned investor, this video is for you. Welcome back to my channel, and for those who don't know me, I'm a former Nasdaq trader, ex-Morgan Stanley entrepreneur, managing partner, and asset manager. I strategize investment opportunities for our clients, and I build portfolios for a living. What I'm about to show you is one of my portfolios that I have designed and implemented for my own personal use. Don't consider this a financial advice. So let's start with the big picture. Back in January 2023, I started with an initial balance of $1 million. Fast forward to December 2024, and my portfolio has grown to $1.8 million. That's almost double my starting amount. And if we adjust for inflation, it's still an impressive $1.7 million. Not bad, right? Now, let's talk about the returns. My portfolio had an annualized return of 34.75%, which is way above the benchmark I use, which is the Vanguard Balanced Index Fund, which returned 16.62% over the same period. Even after adjusting for inflation, my portfolio still delivered a 30.83% annualized return. That's the power of strategic asset allocation and staying disciplined. So, what's inside this portfolio? I've got a mix of ETFs, individual stocks, and even some crypto exposure. Let me break it down for you. So I've got 5% in TSLS, and this is a leverage ETF that gives me 2x exposure to Tesla. It's a high risk, but as you will see, it paid off big time. I've got 5% in Bitcoin, and I know that crypto can be polarizing, but I wanted some exposure to this digital asset class, and it's been a very strong performer, as you all know. Then I have got 20% GEPQ, and whoever is following me on X knows that GEPQ is my favorite, and I'll tell you why in this video, but this is a solid income generating ETF that focuses on tech stocks, and it's been a steady performer with a nice yield for many years for me. I've got 15% SPY, and you can't go wrong with the S&P 500. It's actually the backbone of my portfolio. I've got 10% GLD, and gold is my hedge against market volatility, so it's not the most exciting asset, but it's a safe haven for sure. I have got 10% TSLS, and this is my hedge against Tesla's downside. It's been a drag on returns, honestly, but it's there for risk management. We'll talk about it later. I have got 5% SCHD, and as you all know, I love dividends, and this ETF gives me exposure to high-quality dividend-paying stocks. I have got 10% PG, and it's a classic consumer staples company. It's not flashy, but it's obviously reliable. I have got 10% GEPI, another income-focused ETF, and it's been a consistent performer. And lastly, I've got 10% Nvidia. And this has been the star of my portfolio, honestly. Nvidia's growth has been incredible, and it's been a huge contributor to my returns. Now, let's talk about the stars of the show. Nvidia has been an absolute powerhouse, delivering more than 198.59% annualized return, and that's insane. Bitcoin has also crashed it to 141.40% return, and then you have got TSLA, which has given me a return of 110.35%. On the flip side, we have got TSLS, and it has actually dragged down my returns with minus 56.99% return, and I don't care, like I said. It's there for risk management. Now let's talk about risk. My portfolio had a standard deviation of 11.07%, which is slightly higher than the benchmark's 10.15%. But the Sharpe ratio, which measures risk-adjusted returns, was 2.33 compared to the benchmark's 1.08. That means I was getting more return for every unit of risk I took. And the Sortino ratio, which focuses on downside risk, was even better at 5.62 compared to 1.95 for the benchmark. So even though I took on some risk, it was well worth it. Now, of course, no portfolio is without its ups and downs. My maximum drawdown was minus 4.0 69%, which happened in August 2023. But I recovered from that pretty quickly, and overall, my portfolio has been relatively stable compared to the benchmark, which had minus 7.38% drawdown. Finally, let's talk about asset allocation. My portfolio is heavily weighted towards US stocks, with 64.41%, with a smaller allocation to cash, around 13.38%, and other asset classes of 21.48%, which includes gold and crypto. And I have got around 88% in large cap stocks, which have been the driving force behind my returns. And in terms of sectors, technology makes up the largest chunk at 39.22%, followed by consumer staples at 20.19%. Well, I hope it's not a lot of numbers for you. It's been quite a wild ride for me, honestly, but I'm really happy with the results. If I had to give you any takeaways, let it be these 5 main strategies. I'm a big fan of ETFs, honestly, because they offer instant diversification, low cost, and ease of trading. Let me break down the ETFs in my portfolio and why I chose them. I have got GEPQ. This ETF has been a steady performer with an annualized return of around 30%, with an SEC yield of around 10%. It focuses on tech stocks and uses a covered call strategy to generate income. It's perfect for investors who want exposure to tech with a steady income stream. Then I have got SPY, and this is the backbone of my portfolio. It tracks the S&P 500 and has delivered an annualized return of around 26 to 27%, with an SEC yield of around 1.14%. It's a low-cost way to get exposure to the largest companies in the US if you don't know what stocks to choose. Then I have got SCHD, and this ETF focuses on high-quality dividend-paying stocks and has delivered an annualized return of around 9.14% with an SEC yield of 3.80%. It's a great way to generate steady income while maintaining exposure to large cap value stocks. Then I have got another income-focused ETF, GEPI. It has delivered an annualized return of around 12.16% with an SEC yield of 7.09%. It uses a covered call strategy to generate high income, making it a great choice for income investors. Now, the second takeaway is that I have allocated a significant portion of my portfolio to tech, and it's paid off big time. Nvidia has been a star performer, and I also have exposure to tech through GEPQ and SPY. Tech is the future, and I believe in betting on innovation, honestly. However, I also hedge my bets with assets like GLD and TSLS to manage risk. The third takeaway is that I know that crypto can be controversial, but I believe it's an important asset class for diversification. Bitcoin has been a strong performer for me, and while it's volatile, it's just a small portion of my portfolio, just 5% as you know. I see it as a hedge against traditional financial systems and a way to participate in the growth of the blockchain technology. 4, I love dividends because they provide steady income, even in volatile markets, and that's why I have SCHD and PG in my portfolio. These assets may not have the explosive growth of tech stocks, but they provide stability and consistent returns. Plus, reinvesting dividends has been a key part of my strategy to grow my portfolio over time. Finally, I want to emphasize on the importance of risk management. I use assets like GLD and TSLS to hedge against market downturns. While they may not always perform well, they help protect my portfolio during volatile periods. And remember, it's not just about maximizing returns, it's about managing risk so you can stay in the game for the long haul. So there you have it, my $1 million portfolio and the strategies behind it. If you found this video helpful, give it a thumbs up and let me know in the comments below what's your favorite asset class. And don't forget to subscribe for more content like this. Thanks for watching, and I'll see you next Sunday.